Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to this morning's webinar. The Australian dollar, well, what an interesting price action we've seen in the last 24 hours. The market first of all briefly gave a challenge to the upside where the bulls were determined to take on that challenge of the 60-day moving average. But instead the market was rejected and now breaking down as it challenges the 77.45 support. I feel the market from the rejection should post further losses and sub 77.40-45 should look towards 76.85 and down towards 76.30. Now, with that being said, with the break of the 60-day moving average, and if you look here over the period of the last couple of at least 6 months, is that when we broke the 60-day moving average, it first of all gave us a bullish sentiment, bearish, bullish, and then bearish. And then when it broke here around 76.80, the market rallied all the way up towards the highs around 81. Now that we've briefly respected it and now we have not and taken out the level of 78.20.30 on the 60-day moving average, my view on the weekly is the fact we're looking down towards 75 cents as an objective. This is a longer term picture, but nevertheless the market does look poised for a further weak price action for the Australian dollar. So any recoveries should fail in the short term. Two things to note is that with the dollar index, the double bottom neckline comes in at 90.45 to 55. Well, the market is trading right at this moment at 90.55. On the flip side to that is the fact we've got the double top reversal with the neckline coming in at 122, which we are just breaking now. It is regarded that further confirmation would support the move down towards 117.5 to 118. The reason behind that is the way the double top or double bottom works is you measure it from the top of the head to the neckline, and if we just bring that up a tiny bit and then bring it down, you can see the measured move comes in around 118 from the break. What supported this pattern all along is first of all two tops, a bearish outside range day, and now indicators all breaking down. It's given me this projection for the euro, so I expect to see any advances with the cap now seen roughly around 122.40 to 122.75. Now, what started this all was the newly appointed Fed Chairman Jerome Powell, where he addressed Congress and detailed the central bank's outlook on monetary policy and economic growth for this coming year and also in 2019. We have seen some data, he said, that in his case will add some confidence to his view that inflation is moving to the target that they're looking for, around 2%. Powell also told lawmakers we have seen continuing strength around the globe and has seen fiscal policy becoming more stimulative. Now, if this is the case, this March is factored in the 25 basis point hike on the 21st. And we've still got a few more to come. Now, the second and third quarter rose about 80% to 70% respectively. So if that's the case, then we should see the surge towards 2.25% to 2.5% by year end of the interest rates. So currently the current level is around 1.25% to 1.5%. Dollar yen unexpectedly turned around, with yen strengthening in front of that downtrend that comes in around 107.50 to 75. Is now giving opportunity for the market to buy on dips. Overall, I'm looking towards 106.0515 as a buy area. I've been saying this all along, and I do expect to see eventually the dollar yen being recaptured by the bullish strength and taking it through 107 on towards 108 to 109. Technically, the market is bullish. Now, interestingly, my view on sterling finally come through. Now, the uptrend was at 136.80. That's risen now to 137, figure 25. And what began was overnight that sterling once again fell victim to the UK politics and the Brexit. In the latest saga, the UK Foreign Secretary Boris Johnson stated that the UK would not remain subject to the ECJ ruling. Now, that is the European Court of Justice. In related news, in Brussels, it was that the demand to the UK to remain under the European Court of Justice and oversight indefinitely post-Brexit under the post-divorce agreement. Theresa May is speaking later tonight, so there'll be a lot of eyes on her if she hasn't spoken for this year, and also there'll be a lot of questions asked about that. But the Brexit clock is ticking, and it is not possible to extend the Brexit transition period beyond 2020. Overall, I expect to see the market take on the challenge towards the uptrend at 137 figure 25, which would expose a region of 135 if breached. The gold outlook still remains bearish, and I'll still look towards that foundation where the bulls have camped out at 1,300. I expect to see a rebound like previously that we saw this year and also late last year around that 1,300 level. Look back up towards the top side of around 3,050 to 1,360. Silver still remains towards the support that comes in either at $16.20 to see a bounce from there. Let me just put that in. This is where we saw recently in February the market rebounding, so I'm looking for demand to come back from that level. Any advances should fail towards the top side while the bears are still in control. And to round off with oil, the market still looks very negative as we look towards the $58 region after the rejection last night and plummeting very heavily away from the 64.5 level. Overall, I expect to see oil weak, and if you look at the weeklies, there is no momentum whatsoever, so I expect to see this easily reach its target. So that wraps up for today. Thank you very much for joining me, and I hope you enjoy the rest of the day that's ahead.